What can March Madness? What are the parallels? We mentioned a Venn diagram earlier. Where does March Madness and where does stock investing actually correlate here? Where are some analogies, metaphors that we could take? Right. Number one is that in the stock market, it's very easy to diversify your picks. Right. So imagine. The S&P 500 index is you owning all 500 stocks and weighted towards how much they weight and on the S&P 500. So imagine that you were to go invest on every single basketball team in the 64-team March Madness bracket, but you're putting more money on number one seeds and less money on, 16 seeds, things of that nature, right? Well, now all of a sudden you're really de-risking right there. You're really diversifying your odds. And I actually don't know if you would win money if you did that. That'd be a really interesting study right there, right? I wonder how much more you'd have to put on the one seeds and the 16 seeds, but basically we don't know who is going to win at the end of the day. That's what's so great about this tournament. And that's also the stock market. We really don't know who's going to win over the next 5, 10, 15, 20 years. Shoot, I don't think many people even knew about NVIDIA 5 years ago. And here they are, right, leading the way for a lot of things. So diversifying your picks rather than just putting everything on one number one seed just because that was your alma mater. We're gonna put money on multiple teams here. That's exactly what we want to do with investing. Rather than putting all of our money into one stock, we want to diversify it to the tilt on there. Right now, I do want to be clear about diversification. All right, the easiest way to make a lot of money is what we call concentration of assets. It's also the easiest way to lose a lot of money, right? So if you had a really good feeling about this one team and you put all, let's say you had $1,000 to bet, you put all $1,000 on that one team. Well, that is going to be the easiest way to make a lot of money, right? Because when you diversify, you are going to limit some of the upside, but it's also the quickest way to lose that $1,000, right? Because the chances of you being right are very slim. Right. So same exact thing in the stock market. The quickest way to make a lot of money is choose one stock and hope for the best. But like we said, hope's not a great strategy long term, right? So if we diversify, we're going to increase the odds of us earning money and making money over time. But we're also probably going to limit a little bit of our downside or our upside right there. Definitely lowering the downside and are increasing our floor, but also lowering our ceiling through diversification.